Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is November 6 and we're starting from majors. Euro dollar pair and pound sterling dollar pair. Evangelos Palakis presents. At the end of the last week, the Euro bulls continued their advance and conquered new highs. They even managed to close the previous working week outside the Ichimoku cloud. However, with the opening of the 2 days trading, the upper boundary of the cloud changed its position and still affects the situation. As a result, the current situation is once again tied to the overcoming of weekly resistances, which have now converged in the area of 1.0733 Senkou Span A and 1.0766 Fibonacci Kijun. The next task for the bulls players will be to exit the daily cloud and test the reinforced area at 1.0862 and 1.0868 weekly medium-term trend. Failure by the bulls and a return to bearish sentiment will shift the market's focus to nearby supports, which can currently be noted at 1.0665 daily levels and 1.0633. And the level of 1.0614 and 1.0609 weekly short-term trend plus monthly medium-term trend. On the lower timeframes, the main advantage currently belongs to the bullish players. Today, their upward targets within the day await the market at 1.0781, 1.0830, and 1.0913, resistances of the classic pivot points. The key levels of the lower timeframes are currently forming a wide zone for a corrective decline, ranging from 1.0698 central pivot point to 1.0617 weekly long-term trend, with intermediate support potentially provided by S1, 1.0649. A secure consolidation below these key levels and a reversal of the moving average will influence the current balance of power on the lower timeframes. To exit the zone of uncertainty, the pound bulls players took a bold and decisive step at the end of the last week. They showed activity which allowed them to push the market beyond the nearest weekly resistances, reformatting these levels from resistances to supports. In the case of a decline, weekly supports in the area of 1.2268, 1.2292, upper boundary of the weekly cloud, and short-term trend can now play an important role. In the current situation, the continuation of the upward trend will aim to test the next cluster of resistances in the area of 1.2458, 1.2472, and 1.2506 monthly levels plus weekly Fibonacci Kijun. The main advantage on the lower timeframes is currently on the bulls' side. The potential boundaries set within the day by the classic pivot points, thanks to Friday's activity, have been significantly expanded today. Therefore, the upward targets can now be noted at 1.2451, 1.2522, and 1.2656, resistances of the classic pivot points. In the event of a change in sentiment and a development of a decline, the following supports may come into play one by one. 1.2317, central pivot point, and 1.2246 S1, and 1.2190, weekly long-term trend. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitris Tapas. Early in the European session, gold is trading around 1987, within an uptrend channel formed since October 30, and within a range zone between 2005 and 1965. Currently, gold has reached the 21 SMA, located at 1986. And it's expected that around this point gold could have a technical rebound to cover the gap left at the opening of the weekly session around 1992. Once this gap is covered, gold could resume its bearish trend or continue to rise until it finds resistance at 2005. And this could be seen as a selling opportunity at both levels. Gold has upside potential, and as long as it trades above 1968, we could expect it to continue rising in the coming days. It could reach plus 18 Muri, located at 2031. On the other hand, if gold falls below the 78 Muri level, 1968, and consolidates below the 200 EMA, 1941, it could reach the psychological level of 1900, which could be the beginning of a change in the trend in the medium term. As long as gold falls and rebounds between 1968 and 2005, a range-bound movement is expected, and we could see these levels as a key point to buy or to sell. If gold falls towards 1968, which is the bottom of the downtrend channel, it could bounce around this level, which could be seen as a signal to buy, with targets at 1987, 21 SMA, 2078 Muri level, and 2031. And finally, here's Laurie Bailey with AUD-USD currency pair forecast. Let's have a look. The Australian dollar gained 80 pips on Friday. The price reached the target level of 0.6514 and settled above the balance and MACD lines. Staying above 0.6514 means the next target will be 0.6612. The signal line of the Marlin oscillator has slightly curved downwards, which may indicate consolidation below the reached level before further upward movement. On the 4-hour chart, the reversal of the Marlin oscillator is more pronounced, signifying a release of tension before further growth. The Reserve Bank of Australia meeting will be held on Tuesday. An interest rate increase from 4.10% to 4.35% is expected, considering that Australia has one of the highest inflation rates in the G20, 5.4%, a rate hike is quite possible. That's all for today. See you online soon and good luck.